It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Ramping up pressure, President Trump warns of sweeping new tariffs on India and China to bring Russia to peace talks with Ukraine. In AI we trust, Oracle surges after giving a blowout outlook for its cloud business. And U.S. equities on track to notch a fresh record as rate cut bets stand firm. PPI is on deck. So all that setting the tone today, and as you can see, it is a positive one. Those Mag 7, well, we may need to broaden it out. Oracle is up almost 30% pre-market. As you can see, S&P futures looking to post another record today, pointing to a gain of 0.2% at the open. NASDAQ 100 futures also up at 0.1% right now. We obviously have some geopolitical tension in oil prices. Crude still at 63.30 a barrel, but up 1.1% after Russia's drone incursion into Poland and, of course, Israel's attack on Hamas leadership in Doha. Let's flip it up and look at bonds. It continues to be a fascinating trip in bonds. A little bit of curve flattening today. You can see we have the 2-year yield up to 3.54. That 30-year yield, though, still lower at 4.73.72. Full cuts priced in now, and the possibility of a third if you look at money markets. So let's get to some individual stocks to watch now. Over to London and Valerie Teitel. Valerie.
Bonnie, let's start with Oracle. What a blowout quarter for the software company, up 28% in pre-market trade. It all came down to their guidance when it came to their cloud infrastructure business. They now have a backlog 4 times that the size of Google, even though they're a way smaller player in the cloud business. The CEO saying they had an astonishing quarter. They signed 4 multi-billion contracts with 3 different customers, and it doesn't end there. The co-founder Larry Ellison could become the world's richest person, coming very close up to Elon Musk after this rally in Oracle shares. We also are seeing the impact on the wider tech market and on the wider supply chain for Oracle. CoreWeave, who is a big partner for Oracle in the cloud infrastructure business, up 7%. NVIDIA, who is a big customer from Oracle as well, up nearly 2% in pre-market trade. But lastly, let's head over to Copenhagen. I want to talk about Novo Nordisk. The new CEO, who just took a seat a month ago, has now announced a round of layoffs, 9,000 jobs he wants to cut by the end of next year. It's around 11% of their workforce. The stock is up 2.6% on this news as Novo Nordisk tries to regain some ground lost to competitor Eli Lilly. Bonnie.
Valerie, thank you so much. Valerie Teitel there in London. And in just moments, we're going to be pushing ahead to CPI coming later in the week with Michael Sneyd of BNP Paribas, and Keith Lerner of Truist joins us on this equity market later this hour. So, more data coming following those disappointing payrolls revisions. We get PPI today, CPI and jobless claims tomorrow, and the University of Michigan sentiment survey Friday. Michael Sneyd of BNP Paribas pushing ahead to the inflation reports, writing, quote, "The market impact of a CPI surprise is asymmetric. We think a hotter than expected print will produce likely only a modest reaction, given that labour market warrants cuts. A softer than expected print would provide greater conviction in the Fed easing cycle." Michael joins me now. He's head of cross-asset and macro quantitative strategy at BNP Paribas. So it looks like either way, whether we get a hot or a soft inflation print today and tomorrow, Michael, we're getting a cut. It's just the extent of the dovishness of that cut. Is that correct?
That is correct. And I think that's important for the way that the market is trading. You're seeing equities being stronger, and the backdrop that we're seeing where the Fed is allowing to cut rates without there necessarily being a steep downcline in economic activity. That is a very good outcome for risk assets. And we think it's also a negative outcome for the dollar. In terms of the pricing of rate cuts following the CPI, we see that 25 basis points is already baked into the market for September. We think it'll be interesting about the pricing for December. We do expect 3 rate cuts to be delivered this year, and that's not yet fully priced. It's largely priced, but not yet fully priced into the market.
How would they come, each at a meeting apiece between now and the end of the year? Or is there a possibility of a jumbo rate hike to kick us off?
So we do think that there's be 25 basis points at each of the 3 meetings for the rest of this year. We had considered that there could be a risk of a 50 basis points, a jumbo cut coming in September. But when you look at market pricing, the market seems to be reluctant to kind of start to price this in. Straight after the non-farm payrolls, you saw the pricing, the probability of a 50 basis point cut increase slightly, but continue to remain very low. Yesterday, I think the data around the payrolls revision was also a bit of a test. We saw a downward revision that was larger than had been anticipated. But again, the market was reluctant to price in a 50 basis point cut. So it seems that the narrative that maybe you could get a jumbo rate cut is probably going to be declining over the next week.
Michael, a judge has temporarily blocked President Trump from removing Fed Governor Lisa Cook. I'm wondering how you're factoring all of the machinations around the Fed and the personnel at the Fed, and then sort of beyond that, how much independence is compromised into your forecasting.
So when it comes to our discussions with clients about how to kind of incorporate some of these kind of Fed independence type rhetoric, I think one thing that's reassuring from a positioning perspective is the trade that you want to put on from an economics perspective and a trade that you want to put on from a Fed independence perspective at the moment are reasonably aligned. You want to be positioning for the Fed delivering slightly more cuts than is currently priced into the market, and you want to position for a steeper curve. So at the moment, it becomes a bit of an easier trade for clients to manage. If we would see a different situation on the economic front or a very, very hot CPI print, that could change. But for now, the two kind of trades that come out of the process are similar.
So we are seeing a little flattening today, but just how steep can that curve go, Michael? Everyone seems to be putting on steepeners at the moment. And, you know, where do you see those yields at the end of the year?
So I think if we focus on, say, the 10-year points of the curve, so we think that US 10-year, you could see the yield rise up to 425 by the end of the year. So still very much in the ranges that we've had over the last couple of months, but a bit of a steepening pressure from where we are now. So we think this is a good opportunity. And I think one of the core things about our economics view that's behind this is that we think that the slowdown that we're having in economic data at the moment, that this is really due to the impact that we had from the turbulence in the market back in Q2. We think in going into Q4, actually some of the underlying trends of the economy do look resilient. And so actually we'll see a bit of a pickup of growth in Q4 versus Q3.
Yeah, it's fascinating. You're pro-risk really across asset classes. I'm curious as to why you think positioning is really not stretched anywhere.
So I think heading into the summer, there was a lot of uncertainty. Summer seasonality gives investors a little bit of a reason to not be too aggressive on putting on positionings. And we think now that we're going into the end of the year, this is a period in which investors want to show that they can generate returns. And so we'll likely see positioning increase. I think this leads to kind of relative regional performance as well. So, for example, in Europe, we see that European stock positions are very light. Our positioning metric is at just 30, and that's a score that goes up to 100. In comparison, the US is at 50, so pretty much median positioning. So still light, but not quite as light as Europe.
Well, speaking of Europe, I was fascinated, you know, you like EU compression trades as well, in particular long OAT versus Bund, long BTP versus Bund. Are you expecting a satisfactory end to the French situation, or are you just very negative on Germany right now? And, you know, I would point to the fact that basically France and Germany, when it comes to bond yields, there's France and Italy, I should say, there's almost no difference now, a couple of basis points between them.
This is, of course, very topical at the moment. So our reflection, particularly of the OATs, is that we think there's already a sizable premium priced in. And our trade is essentially kind of fading that risk premium that's priced into the market. The fiscal situation is likely to continue over the coming weeks. There's likely to be much negotiation. It's very positive that we do have a new PM announced in France. That reduces the tail risk, some of the tail risks that you could have a new election in the coming months. But essentially, we think that the market is pricing in too much of a premium. And that gives an opportunity for investors to move back into OATs. There's portfolio flows moving out of the US. There's still surpluses from Asian countries, Japan, for example, looking to want to diversify into European bonds. And we think that OATs offers an attractive yield at this level.
Michael, such a pleasure to talk to you. Thank you so much. That is Michael Sneyd of BNP Paribas. Now, two other top stories trending on the terminal this morning. A judge has temporarily blocked President Trump from firing Fed Governor Lisa Cook over alleged mortgage fraud. The ruling means Cook can likely attend the Fed's meeting next week to vote on whether to lower interest rates. JP Morgan, Fifth Third and Barclays are among the banks bracing for potentially hundreds of millions of dollars in combined losses from loans tied to subprime auto lender Tricolor. Tricolor focuses on lending to borrowers across the U.S. Southwest who typically have poor or even no credit scores. Representatives for Fifth Third, JP Morgan and Barclays all declined to comment. Sébastien Lecornu will become France's fifth prime minister in 2 years, despite mass protests. Lecornu's minority government will need tacit support from the left or from the right to pass a 2026 budget and survive a possible confidence motion. Coming up, Poland shoots down Russian drones in its airspace. The country and the continent react. That's next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Pressure mounting over Russia. Poland's Prime Minister Donald Tusk calling out Moscow for a, quote, act of aggression after the country's military shot down Russian drones in Polish airspace. European Commission President Ursula von der Leyen struck a defiant and defensive tone reacting to the assault.
This must be Europe's independence moment. I believe this is our union's mission. To be able to take care of our own defence and security, to take control over the technologies and energies that will fuel our own economies, to decide what kind of society and democracy we want to live in.
Let's bring in Bloomberg's chief European correspondent, Oliver Crook, now for more. So, Ollie, what details do we know about the actual drone assault and Europe's response?
Yeah, so some of the most recent details we actually got from Ursula von der Leyen. She was there speaking in front of European Parliament as the sort of State of the Union address that she does, and for the first one of her second term. And she told us that there were more than 10 of these drones that crossed into Polish airspace that scrambled the jets of the Polish military. They shot down a number of these. And this is not the first time we've seen incursions into Polish airspace. We saw very early on in the war, there was a missile that overshot Ukraine that landed into Poland that provoked a great deal of anxiety about whether or not that is the sort of event that could provoke, Article 5 within NATO and could actually cause a much larger war. Those anxieties had sort of abated until recently, but the reason, Vonnie, this is significant, this is the first time a NATO country has shot down anything over its airspace that belonged to the Russians since the beginning of the war. And we've heard from Donald Tusk, the Prime Minister of Poland, and he is calling to invoke not Article 5, but Article 4 of NATO, which reads as follows: all the parties will consult together whenever, in the opinion of any of them, the territorial integrity, political independence, or security of any of the parties is threatened. So that is what Donald Tusk is calling for. This is an article, Article 4, that has only ever been invoked 7 times before since 1949. So the Poles obviously taking this very seriously. We've heard from some U.S. lawmakers who are basically suggesting that this is Russia just trying to test the limits of NATO, their determination to defend their eastern flank. We await to hear from obviously the key person, Donald Trump, how he will appraise the situation. We should say this comes a week after he met with the Polish president and told the Polish president that actually the United States is willing to commit more troops, more than the 10,000 they already have in Poland, in order to provide more deterrence against Russia.
Yeah, and then, of course, speaking of President Trump, he also has been speaking with European officials. Ollie said he'd sanction new secondary tariffs on China and India for trading with Russia, but only if EU nationals do so as well. What is he proposing exactly?
Yeah, so Vonnie, this is really interesting. So there were some high-level policymakers from the European Union in D.C. yesterday. They were meeting among each other to talk about different ways to bring Russia to the negotiating table, to bring them forth to actually bring an end to this war, which has obviously been a large imperative for the Trump administration. Apparently, Trump dialed into that call and said, listen, we are willing to put secondary sanctions on China, on India, to basically get them to stop buying Russian crude oil, because that is the main vehicle that funds the Russian war machine, but only after the EU does the same. And they were saying that basically the EU should impose up to 100% tariffs on China and India, and that the United States would follow. Now, this is a very sort of interesting dilemma to put the Europeans in. On the one hand, this is the sort of activity that they'd like to see from the United States, but a United States that has become extremely unreliable in their point of view. Are they really willing to torch their entire relationship with China, with India, who they're trying to sort of vaguely retain in the Western orbit with, in the name of Donald Trump, who could change his mind very immediately? I don't know that they're willing to go that far, but it's certainly an interesting sort of thing to put on the table. Is there negotiating space around that? Of course, what the Europeans would have said was, if from the beginning you had been on the same page as the G7, we could have coordinated our approach on China because some of our interests are aligned. Doing it this way is certainly an interesting dilemma for the Europeans to work through, and that's what we're going to be chasing over the next couple of weeks when we speak to policymakers. How
do they even work through this, Ollie? I mean, we know that Europe as a whole has to make a decision. The individual countries obviously can't. So is this, going to mean extraordinary meetings by the Council and so on?
Yeah, so I mean, it provokes a great many questions. There's the question of whether or not the EU is willing to put themselves and their neck out that far. They're already engaged in trade conflict with China. China just recently retaliated against their EV tariffs by putting tariffs on pork. Do they want to escalate that? How at risk are they already in their supply chains and their exposure to China? But as you rightly point out, Vani, there are a lot of people in the room at the European level. You need to have unanimity on a lot of these sort of sanction and tariff issues. The Hungarians, for one, have caused a lot of problems around Russian sanctions. Are they going to be willing to go out further still? Again, the Trump administration has some sway in Hungary. Could they get involved? But again, Vani, this opens up a large litany of different questions. The thing is, with the Europeans, they don't move as fast as the Trump administration, right? And that is something that has often frustrated the Trump administration. But they're not going to one day to the other say, listen, we're going to slap 100% tariffs on China, and that's that.
Yeah, exactly. Ollie, thank you so much. Oliver Cook there with all of the latest out of Europe. Coming up, Novo shed some weight. The drug maker is planning to cut 11% of its workforce. That's next. This is Bloomberg. This is Bloomberg Brief. I'm Vani Quinn in New York. Time now for your front page news. First up, on the front pages of the New York Times, Wall Street Journal and Washington Post, a judge blocked President Trump from firing Fed Governor Lisa Cook. The judge concluded that the alleged mortgage misconduct likely didn't amount to cause to fire Cook under the Federal Reserve Act. The order allows Cook to remain on the central bank's board for now while her legal challenges proceed. Next up, on the FT, NATO fighter jets shot down Russian drones that came into Polish airspace for the first time. Warsaw described this as, quote, an unprecedented violation of its territory. NATO said it was committed to defending every kilometre of NATO territory, including our airspace. And on Bloomberg, Novo Nordisk will slash 9,000 jobs globally and cut its profit forecast for the third time this year. It's fighting to recover the ground it had lost to rival Eli Lilly in the obesity drug market. They include 5,000 reductions at home in Denmark, where mass layoffs are highly unusual. Joining us now for more on this story from Copenhagen is Bloomberg's Christian Wienberg. So, Christian, what exactly happened? This is a massive layoff and all at once.
Good morning. Yes, and this was as such not a big surprise to the market because the new CEO had hinted that there would be job cuts, but it might be a surprise for some of Novo's employees here in the home market of Denmark because Novo is not known for doing these massive job cuts in Denmark, and there might have been some that would have hoped that they would have been a little bit less aggressive with the cuts, and also maybe have hoped that at least the people we've spoken to had talked about, they were hoping that this would mainly hit consultants and such. But this is a big hit to Novo's operations in Denmark.
What's Novo hoping to do in order to turn things around? Does it give up on its GLP-1s, its weight loss drugs, and try a different pipeline?
No, I mean, for sure, this is still their biggest cash generator. What they're doing is mainly that they're probably going to cut some stuff in their pipeline, some R&D projects, presumably some of the earlier stuff. We will know more next week when Novo will hold an investor call and give an update on the R&D side. But they have today said that they're going to increase their impairments this year because they're going to shelve some projects. So there will be projects that will be shelved presumably because Novo doesn't see them as profitable enough to progress with.
Yeah, now it's 9,000 jobs, it's 11% of the workforce. What kind of position is Norway in to take these people in and provide employment?
Well, the good news is that here in Denmark, the unemployment rate is quite low. So it won't be a massive hit immediately to the employment situation here in Novo's home country. But if you look at it from another side, then most of the job generation that has occurred in recent years in the private sector has come from Novo. So we won't see a kind of mass unemployment levels in Denmark, but we'll see some of the growth levels that had become the norm. That's going to stop now.
Christian, thank you so much. Christian Wienberg there in Denmark for us. Thank you. Coming up, stocks on track for record highs. More with Keith Lerner of Truist. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief, and here's what you need to know. Ramping up pressure. President Trump warns of sweeping new tariffs on India and China to bring Russia to peace talks with Ukraine. In AI, we trust. Oracle surges after giving a blowout outlook for its cloud business. And U.S. equities on track to notch a fresh record as rate cut bets stand firm. PPI on deck. So let's get to those markets now. Futures pointing a very green picture today after a sixth day of gains. Some of this, of course, will be thanks to Oracle, which was up almost 30% post-market and indeed pre-market this morning. So we might have to expand that Mag 7 to Mag 8 or even Mag 9 if you include Broadcom as well in the last few weeks. We also have crude, a little higher, although it's paring those gains now. Of course, geopolitical tensions in the background, what with Israel's attack on Hamas leadership in Qatar, of all places, and, of course, those Russian drones over Polish airspace. Let's look at bonds, because we're seeing a little flattening today, but no doubt at least 2 cuts and possibly even 3 are priced in. 2-year yield at 3.53, down a couple of basis points actually just in the last few minutes. 30-year yield at 4.73. Quite the move, a 30 basis point move basically just in the last couple of weeks. Let's get to some individual stocks now. Here is Valerie Teitel in London. Valerie.
Good morning, Bonnie. Let's start there with Oracle. What a blowout quarter for the database company, all on the back of this cloud guidance, up 29% in pre-market trade. A measure of their future revenue from these cloud contracts surged by over 350%. The company saying it signed 4 different multi-billion-dollar contracts with 3 different customers. The CEO called it an astonishing quarter, and it even puts the co-founder Larry Ellison on the map to overtake Elon Musk as the world's richest person. It is boosting others in its supply chain. CoreWeave is also getting a boost from these Oracle results, up 7%. It does partner with Oracle when it comes to cloud infrastructure. NVIDIA also getting a boost, up just under 2%. NVIDIA chips, Oracle uses a lot of NVIDIA's chips in its processing. So the supply chain definitely being boosted by this blowout news from Oracle. But one side of the market that is not getting any help is Synopsys. This is a company that designs software to test semiconductors. It's down over 20%, nearly 21.5%. They gave some pretty weak guidance and essentially was blaming the trade war with China, the chip restrictions on China, for its drag on Chinese sales. Bonnie.
Valerie, thank you so much. That's Valerie Teitel there. Well, Keith Lerner of Truist has some confidence in this equity market as it marches towards a fresh record. He writes, quote, "While the path forward is likely to be less smooth than recent months, the bull market still earns the benefit of the doubt." Keith joins me now. He's CIO and Chief Market Strategist at Truist. Keith, our Bloomberg opinion columnist John Author is writing that stocks are living in an alternate reality, but that there are some explanations for it. Give us your explanations for your confidence.
Yeah, well, great. Always great to be with you. I mean, it really is about earnings. I mean, we can talk about all the different shifting narratives this year from, tariffs, the labor market. But at the end of the day, stocks are driven by earnings. And what we've seen, not only with the Oracle earnings, but in technology as a whole, we're seeing these new highs confirmed by record highs and forward earning estimates. And what's really important, during this kind of muddled through economy that we've seen the last couple of months, we're actually starting to see a broadening in that earnings theme. So it's going down from the large caps to the mid caps to the small caps as well. So again, in our view, the dominant theme of this bull market remains AI and tech. And with that market almost, and especially in the S&P being almost 50%, if those earning trends continue, which is our expectation, you should still be able to make further new highs as we think about over the next year.
There have been so many promises, though, in the AI space, promises of spending, promises of, needing capacity, promises that the likes of all of us will start using AI in our lives more broadly, and that will just increase demand. What if some of those promises don't come true, Keith? Are we in for a big drop?
No, I mean, obviously the risk right now is that there's high expectations, when in the overall market with a 22 multiple. So that is a risk. But, in our view, it's still somewhat early in this overall adoption phase. I think there certainly will be hiccups, so it won't be a straight line. But, the one thing we try to focus on, because we have all these headlines as far as the MIT report talking about, the utilization of AI. Sam Altman's talked about tech being, potentially in a bubble. But we look at the earning trends, and right now, tech earnings momentum is the strongest among the sectors in our work. So until that shifts, we're going to stick with that underlying trend. I think it's hard to bet against it. And you think about even like as we just discussed on Oracle's numbers, where you're having bookings growth over 300%. I mean, where else? What other sectors are you actually seeing that type of growth? So again, we're sticking with the trend until we see more signs of a reversal, which is limited at this point in our work.
Keith, does it matter to the AI trade what happens at the Federal Reserve, how many cuts and when they come exactly?
I think the rate cuts are less important to the AI trade. I think the cuts are much more important for the rotation trade that we were seeing, more recently. So as an example, this year, we know the S&P is up about 10%. The small caps have lagged. Last month, we had a big month for small caps as the market started to price in those rate cuts. So for our view, that secular trend for AI is the main story. Rates are less important, especially because there's such big balance sheets with cash and less debt. But for the rotation trade, when you think about home builders, small caps, retailers, I think the rate cuts are much more important.
So we do see these pockets of weakness. For example, today we have that tricolor story where several banks are going to lose a lot of money based on subprime auto loans and so on. Do those stories, when they pop up and those pieces of evidence, do they trouble you at all, given that we are slowing to some extent?
Yeah, listen, as a portfolio manager, I'm always worried about the risk. Where could we be wrong? And that is troublesome. But, if you think about yesterday, we just had a big financials conference yesterday. And the rhetoric out of that was actually somewhat constructive, especially with the credit card companies talking about not really seeing much of a change in the consumer still being relatively healthy. And as we look internally at some of our card spend, it's still stable. But listen, the biggest risk is that this kind of slowdown that we see in the labor market, manifest into a more serious downturn, and the Fed is late. So we're open-minded to that risk. But at this point, our baseline is that you just got that one big beautiful bill passed. You're going to get some rate cuts on the way as well. And by the way, the 10-year Treasury is already down 50 basis points for the year. So we're already seeing in some ways some relief there as well. So that's why we actually think by going into next year, we may see a little bit of an uptick in the economy.
So would you play the same themes then for the coming months, even as you're expecting some volatility, or would you start your rotation?
So we want to stick and just kind of keep our eye on the main driver of this bull market, which is AI and tech. So we're still overweight tech, we're overweight communication services. After being more negative on small caps, last month we actually did upgrade more towards a neutral view. But I do think there's some catch-up potential, because you are seeing, unlike last year, you're seeing the earnings for small caps move up. The asset class has underperformed large caps by the most since 2000. You've had a lot of outflows, so you actually have a setup where expectations are still relatively low. So I think on the margin, we would still be with tech, but we would have a little bit more small caps just as a hedge and as a catch-up trade potential. And lastly, that one big beautiful bill had some really good incentives for small caps relative to large caps when you think about depreciation and interest rate expense write-offs.
All right, we'll see the results. Keith, thank you so much. That is Keith Lerner there of Truist. Now to other top stories trending on the terminal this morning. Poland has asked NATO to invoke Article 4 after Russian drones crossed into its territory during an airstrike on neighbouring Ukraine. Invoking Article 4 would trigger consultations on a military response. The EU's chief diplomat described the incident as, quote, the most serious European airspace violation by Russia since the war began. Crypto firm Gemini has increased the potential size of its IPO to $433.3 million, pricing shares at $24 to $6 apiece from $17 to $19. At the top of the elevated IPO range, Gemini would have a market value of $3.1 billion. The firm was founded back in 2014 by Cameron and Tyler Winklevoss. Sébastien Lecornu becomes France's fifth prime minister in 2 years. Lecornu's minority government will need tacit support from the left or from the right to pass a 2026 budget and survive a possible confidence motion. Coming up, President Trump proposes more secondary tariffs on China and India to squeeze Russia. That's next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. President Trump ramping up pressure on Russia, telling European officials he's willing to impose sweeping new tariffs on India and China to push President Putin to the negotiating table with Ukraine. This all as attacks continue in the region, with Poland shooting down Russian drones that crossed into its territory. For more, Jonathan Tamari of Bloomberg Government joins us now from Washington. So it's all getting a little ropey once again, Jonathan, but I'm curious about these secondary tariff proposals. It's very curious to tell a whole continent, or basically, a group of countries, I'll do it if you do it. How are they supposed to respond?
So, yeah, the president, we know, sees tariffs as a useful tool, not just for economic policy, but to exert United States influence all over the world. And he wants the EU to impose these tariffs on India and China in order to pressure Russia. And I think we'll see if they'll be able to respond. One of the complications is that it would take a unified vote in the EU to do it. And there's some countries that are not necessarily as hostile to Russia as others. But I think it's something that Trump will press. We know that he's thrown his weight around and tried to use the U.S. economic leverage to force other countries to do what he wants, to make trade deals. And this is kind of the latest step as he tries to look for a deal to end Russia's war there.
In other developments, a judge has ruled that the president cannot fire Governor Lisa Cook for now. What's next from here?
Certainly an appeal. The White House is not going to let it go there. And we have seen many cases in which lower courts have stopped the White House from doing something they want, but higher courts, and often the Supreme Court, says that he ultimately can. So this is certainly not over. We'll see what happens as the case continues moving through the system.
Well, the Senate's banking panel set to vote on the nomination of Stephen Miron to the Fed's board as well. Smooth sailing for Miron?
Looks like it. There haven't been many objections so far. Remember, every Senate Republican voted to confirm him within the last few months to his current position in the White House. It would take 4 Republicans to defect to block his nomination. They don't see that. We haven't seen that number coming forward at this point. Looks like he'll be confirmed.
Elsewhere, the president told reporters he planned to deploy federal troops to another U.S. city, this after cheering the result of deployment in D.C. What more do we know about his plans?
He said that it could be announced as soon as today. He said that he's working with a governor who would welcome them, which seems to imply that it won't be to one of these Democratic states or Democratic cities where the troops have been opposed. But he has not said where that would be exactly. There's been some speculation, maybe New Orleans, where the governor of Louisiana is a Republican. But he hasn't said specifically. We do know Trump sees this as a way to show America that he's fighting crime, and Republicans see this as a really winning political issue, forcing Democrats on the other side of him. So it won't be a surprise if he does it today and if he continues to do it as time goes on.
All right, Jonathan, thank you so much. Jonathan Tamari, Congress reporter for Bloomberg Government. Turning to tech, shares of Oracle soaring in early trading, nearly 30% after the company stunned Wall Street with an aggressive outlook for its cloud business. Bloomberg Tech Europe host Tom McKenzie joins us now. We've seen some moves pre-market, Tom, but 30% for a company as massive as Oracle is quite the move. What exactly is Oracle telling us?
Yeah, and who would know, based on this move, that they in fact missed on their quarterly earnings. But it was that projection, and it was a measure of the order book for Oracle that is leading to this huge rally pre-market, of course, in shares that could add $200 billion to the market cap of this company, potentially more than $70 billion to the founder, of course, Larry Ellison, in terms of his net worth. It was $455 billion. So just meditate on that for a moment. Almost $500 billion of orders now that they have to deliver on in terms of the outlook. They have signed 4 multi-billion-dollar deals. They've signed deals with the likes of OpenAI. They've signed deals with the likes of NVIDIA and TikTok. And now they have to deliver on that. This is reinforcing the view that the build-out in terms of the AI story is still there because, of course, this is a company that provides the data centers, provides the networking that supports the training of these models and the use and inference and the building on top of those models. So it really reinforces that case. They see the cloud business growing around 77% just in this fiscal year for Oracle, 77% increase to about $18 billion US. Into 2030, say they see that piece of the business growing to around $144 billion US. If there is a fly in the ointment, it's on how they deliver on those orders. The capex spend coming in far greater than the estimates. Around $34 billion US is now projected by Oracle. That was well above the estimates. But the analysts really like this on the call. You heard from the Deutsche Bank analysts on the call saying there is no better evidence of a seismic shift happening in computing than these results. Evercore ISI's analyst putting out a note saying Oracle is firing on all cylinders.
Yeah, and I want to point out that the stock was already up 45% this year
Indeed.
alone before this move today that we're going to see. Meanwhile, it's all good news, apparently, for AI. TSMC's August sales were up 34%.
This is, of course, the foundry based in Taiwan, so actually churning out the chips, the GPUs for likes of NVIDIA, but also, of course, for Apple as well. So salient on the back of the updates that we got from Apple on the hardware front yesterday. But yes, TSMC with their monthly numbers in terms of revenues increasing in the month of August, 34%, sales coming in at about 11.1 billion US dollars. And again, suggesting there is no let up in the demand for those AI accelerators that, of course, are designed by the likes of NVIDIA, but actually produced and manufactured by TSMC.
Well, let's stay with chips because, let's face it, what else is going on in tech at the moment? Synopsys plunging, not quite such a good story here. This is the trade war story. It's weighing on its Chinese sales.
Yeah, the geopolitics taking hit, as you say, to Synopsys, which had seen its stock up about 25% year to date on current metrics. You could see that all but wiped out entirely in the session today. This is because of the outlook and the impact of sales of that software and chip design software into the Chinese market. Export restrictions, they say, have impacted them. Developing some of their own intellectual property has proven challenging. They are cutting headcount by about 10%. It's a challenging picture for at least for the design software business, Synopsys, without impact in terms of the export controls on China.
Tom McKenzie, thank you. Tune in to Tom's show. That is Bloomberg Tech Europe, and it's on this Friday. Turning to financials now, sources telling Bloomberg that JP Morgan, Fifth Third Bancorp and Barclays are among banks facing potential combined losses of hundreds of millions of dollars from loans tied to subprime auto lender Tricolor. For more, Bloomberg's Jennifer Serain joins. This is really a fascinating story, Jenny. I'm curious how it all happened. What was Tricolor doing, or were these banks too vulnerable to this kind of sales pressure, or what happened?
So we're still trying to get to the bottom of it. What we know right now is Fifth Third put out a filing this week saying, they expect to take an impairment charge of up to $200 million. And they actually didn't name the borrower, but basically said that they've discovered alleged fraud with a commercial borrower. And so we understand, based on our sourcing and reporting, that that is Tricolor. I think it's important to remember that this is a subprime auto lender. As you said, it largely caters to undocumented immigrants across the U.S. It's seen huge increase in its business. We understand that it underwrote about $1 billion of loans in a year, and that's up a lot from just 5 years ago. So it's a really fast-growing company. It's clear that these banks were kind of clamoring to get involved, and now we understand that this is, they're facing some sort of fraudulent charges here and alleged fraud.
Yeah, and Bloomberg can crunch the numbers, and we found that Tricolor has sold almost $2 billion worth of asset-backed securities since 2022, many of which remain outstanding. Put this into context for us for the big banks. I mean, will it be a big dent or just a little dent?
I think the number that we were reporting yesterday is that you're looking at hundreds of millions of losses across the industry. So definitely something that the industry as a whole can kind of stomach. But what the risk always is with these situations is actually that, does this shine a light on some shoddy risk management practices or issues with underwriting? Regulators will often come asking, why didn't this get caught sooner, and how was this even allowed to happen in the first place? So I think the actual dollar amount, it's definitely something that each of these big banks, JP Morgan, Barclays, and Fifth Third, as you mentioned, could stomach. But it's more about kind of what does this show about their broader practices? And if you look under the hood, is there something more here that regulators might want to kind of take a closer look at?
And then, Jenny, we're looking at the Klarna IPO as well, set to price at $40 a share, which is above the marketed price. Talk to us about whether this IPO is expected to deliver for investors, given that we saw a firm just completely blow things out of the water.
Yeah, I think people are seemingly very excited based on where it priced last night. So that was well above the marketed range at $40 a share. And I think we'll see how things go today. But based on where futures are indicating, it seems like, U.S. stocks in general are likely to rise at the open. So it seems like it'll be a really good day for this company. And it definitely shows, fintech has come a long way in the last 2 years. If you recall, back in 2021, this is a company that actually was valued at, I think, close to $46 billion in a VC fundraising round, only to see in 2022 that valuation dropped to around $6 billion. So we saw a really big seismic change in kind of investor appetite for fintechs, and you've kind of seen that slowly come back. You've seen Klarna really shift its perception. It's not just a buy now, pay later company. It's really trying to push and be a digital bank. So you see them trying to kind of get into these new products. You see investors finally opening back up and getting excited about this story. So it seems like all signs point to a really good day for this IPO.
All right, Jenny, thank you so much. That's Jennifer Serrain there for us in London. Coming up, we'll get you set up for your trading day with more data and a treasury auction. That's next. This is Bloomberg. Now a look at what's ahead today. First up, the first batch of that inflation data with PPI data dropping at 8:30 a.m. Eastern Time. Then at 10 a.m., the Senate Committee on Banking votes on the confirmation of Stephen Miron to be a member of the Fed Board of Governors. And $39 billion of Treasury 10-year notes go on auction this afternoon. Plus, don't forget, Klarna is set to begin trading today after raising nearly $1.4 billion in its IPO. Some movers, Oracle definitely moving. I think we can say that at the very least. Extending gains after that blowout revenue forecast for its cloud business is lifting other AI infrastructure stocks such as Nvidia and CoreWeave as well. Synopsys plunging after saying it's taking a more conservative view of the quarter after an earnings miss. And Bill Holdings higher after an FT report that Elliott has built a stake. That's it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.